Good evening, guys. Today is October 2nd, Monday. Hope you guys are having a good start to the week. The markets overall seem mixed today. NASDAQ did okay, 88 points up, about 6.667%. The S&P 500 also did okay, but mostly flat. I would call it flat. And then Dow Jones went down about 75 points, about 0.22%. Overall, still all the indices are at or below the 20-day moving average. So I'm not still very bullish on stocks. I'm just taking a step back and just not investing too much time and effort trying to play the market right now, given how choppy it is. One of the stocks that came up on my radar today, went up about 5%, is Discover Financial Services. Let's go through our 5-step process, see what's working, what's not working. Would you trade it? And see why the stock popped up so much. So first off, we always start with the fundamentals. First step in the process, look at the financials. See, why is the stock doing so well, or is the company doing well at all? Start with annual on an ongoing basis. So the company, okay. So on an annualized basis, they were growing at about less than 10%, more than 10%, a little bit up and down, dramatically reduced their growth in 2021, picked up again in 2022, and now trailing 3 months, they're probably going to do about another 10% up, 10 to 20% up. So actually that's 20% up for 2023. That's the trailing 12 months. They might actually hit much better than before. Sorry, let's look at it from a quarterly perspective. There you go. That's one of the reasons why it's doing well. Overall, from a company perspective, went from 3% on quarter, doubled that again, did very well after that, and almost double again. So a little bit of a slowdown in Q2, but still very strong quarter-over-quarter revenue growth, or year-over-year revenue growth on a quarterly basis. Operating income seems to have dropped however, and even the pre-tax income has dropped over. So revenue is growing, but income doesn't seem to be translating to the bottom line yet. Doesn't seem to be translating. Balance sheet wise, they've got about 18 billion in debt last quarter, about 133 billion in assets. So safe company to say the least. And valuations, just look at it really quickly. It doesn't seem like it's great valuations. 6 times current valuation for price to earnings, which is really low. For example, if you look at JP Morgan, actually look at Visa, which is a competitor to Discover Financial Services. They're not growing as fast as Discover is, but if you look at Visa's valuation, they're probably closer to the 30 range, which is what Walmart is, which is what Apple is. So good company. And then you look at MasterCard as well, just as a competitor to DFS. So Visa was 29 times price to earnings ratio, and MasterCard is 37 times, so even better. And then you look at Discover Financial, they're doing 6. That's a challenge. So that may be an opportunity. That's one way to look at it, definitely. So then let's look at it at a very, very long-term time frame. What's the stock been doing? Oh, it's been consolidating. So we went public in 2007, 2008, something like that, did a dump. This is a stage 4 breakdown after IPO, all the way until February 09, and then did a very good run up, consolidated a little bit, moved up again, consolidated very little, but it's been in a steady rise all the way from 2011 to 2014. And then a little bit of down, but mostly this phase I would call another consolidation phase, for lack of a better term. Sharp down for February 20. This was probably during the COVID timeframe. And then since then, it's created new highs on an ongoing basis. But now, if you look at it from a monthly basis, I would call this as a stock that is definitely in the consolidation zone. This is not making higher highs and higher lows as much as it is just playing within its zone. Let's draw that zone. So this is what the stock has been doing for the last couple of, I would say all the way from 2020, all the way to 2022. It's just been going up and down. The zone is very large, though. It has been all the way from the 78 time frame, if I had to draw that, $80, all the way up to about 134. So that's a long range. But realistically, it has touched those ranges, and I would more likely put it in a range basis closer to, this has been the range, $120, 80 to 120. So about 50% up and down. This is a large range. So you know it's range bound, number one, in the very, very high level time frame. And you don't see anything big except for the stock has been consolidating and then moved a little bit down. So this is not a good sign, but let's keep going. Okay, the weekly chart. The weekly chart shows, more consolidation. And in fact, I see a double top. So let's draw that portion of it first. Make sure that we get a very good So this is actually a double top, one top, two tops. It's touched this top twice. That's one area of resistance that I think it'll have to break through. And an area of support, it just broke through that area of support, multiple touches in the 88 range. And then, oh yeah, so it broke down from the, no, actually, let's look at it. It's what, 88, 88.28. That's the multiple touches. So 88.28 was a big area. It broke through that. And then today it went all the way up. So realistically, I would say this should probably go a little bit lower, given that it's touched this zone. This is another area of resistance, but it bounced off of the 84 in the last couple of weeks, a couple of days, actually, a couple of weeks. So this is an area of support, 84. It shouldn't have gone past this 88 range, given that it's touched it multiple times. So it should find support in the 88 right now. So even if it does take a breather for the next couple of days, 88 is a good support zone. What is it doing in the weekly chart? And the weekly chart, double top, it's come to an area of resistance, and now it's trying to climb back up again. That's where the gap is. Today it had a big gap up. It's gone up about 4.85%. So then let's go to the daily chart. It's been consolidating. You can see that. And then you're trying to figure out what happens after that. So this is a huge gap down on earnings. So that's not a good sign. That means it should have gone down. So the gap down on earnings was up all the way from 121 before earnings. The next day, July, after earnings, it closed at 101, 102. So huge 20% drop. And then after that, again, this is a close 101. And then it gapped down significantly 15th of August to the 92 range. And then since then, you can see this has been a bear flag that has been coming out for quite a bit of time. Let's draw the bear flag out just to make sure that we can get a good sense for why it did what it did. That's not a good sign. Maybe a little bit more, but you get my point. It's been on a downward trajectory. It found support here. Let's draw that as another support line. This is in the 84 zone. It should find support here. So let's assume it goes down a little bit over the next few days just to retest it. But it shouldn't have actually gone down so much. It should have stopped at 88, but took a little bit of a bigger dip than it did. Usually these things do. So it's a zone. Let's call it a zone as opposed to just a range. 84 to 88 is a zone of support for it. And similarly, in this range, 120 to 119, even a little bit more than that. Even this might be 118 might be a zone of resistance. But in the near term, there's another zone of resistance they have to climb. So I like the action. I'm not going to invest in this, however. It's got to go past this 95 zone first, which then it gets into the gap and tries to move away from the gap. So I'm definitely not trading this. This doesn't look like a good risk reward. It could go down to 88 and even back to touch this 84 from where it is right now. That's a $4, close to about a $5 to $10, $8 move down. And the upside is only from 91 to 95. That's a 50-50 odds. I'm not taking that risk. I don't think it is worth it for the sake of the stock to move up. So overall, earnings seem okay. Slow down a little bit in terms of revenue growth. It's trading very poorly relative to its peers. That's not a good sign usually. And so you want to check a little bit more as to why is it that it went well today? Why did it do well today? That's not any good news. So you're trying to figure out, it rises after a company says, they have a compliance order that they have to figure out. That's the reason why. So this is not any significant fundamental news. So I wouldn't be too bullish on the stock going all the way up to 95. My suspicion is it's going to hang out in this zone between the 93 and the 84 zone for a little bit more. It might actually take a little. This candle is also not a very great candle. It definitely did a huge gap up, but it ended up at the lower end of the spectrum, even though it was a positive day. So should the news have been more positive, or should the news have been more meaningful, it would actually have a strong green candle. So I'm not a big fan of the stock. I would not trade the stock right now. Thank you guys for watching. Please feel free to share, subscribe, like the video, send me comments, send me your notes. Appreciate it very much.